Hello traders, Gary Wagner here. It is approximately 11:20 in Honolulu, 4:20 in New York. It is Thursday, April the 26th, 2012, and this is the daily report for gold and silver. We talked about critical levels in silver. We talked about critical levels in gold. In gold, the bottom of that triangle resistance. In silver, 61% retracement of the recent rally. It seems as though both those levels hold as we see the market bouncing off of those levels. Currently have gold up about 1280 with a low of 1641.80, 1661.10 is the high. Silver current, and this is off of Kitco, 31.19, 31.09, bid-ask spread up 38 cents. And the low is 30.61, high 31.37. On today's report, we'll look in detail upside targets and also talk about re-entering on our silver positions. All here on today's daily report. Traders, I want to start out this morning by looking at gold, and then we'll move over to silver. Traders, this is our 440-minute short-term for us candlestick chart and converted into Henkin format. So it's a Henkin candle chart. As you can see, we've gone solid green, and this candle, of course, is still trading right in here. But what you can see is the candle size itself, and that's what we're looking for, even on a short-term basis, to give us indication of strength of trend. But here's what I'm finding interesting. And that is as follows. When we take a look at this particular candle right in here on a 440, it has a lot of the telltale signs that I look at in terms of looking for bottom reversals. The size of this tail is quite long, very, very short body in here. Small tail at the top. Obviously, it is a doji type candle, even in the Henkin format. If it was in a Henkin format, it would actually be called a rickshaw man. Look at some of the extreme lows that we got. This, of course, down here is a missed ticket, was 1611. But if you look, it traded pretty much right at the line. And it depends on how you draw the line, because as you can see, I'm picking it off of these lows. Here, because it's a missed tick, I pick it off of the bodies. And so you can see that it really hovered that line. Let me try to just line that up a little bit better off of this body here, and then we'll go ahead and blow that up. And you can see quite easily that it really just kind of traded along this line, a little bit below at some points, but that's what I said a couple of days ago. I don't mind it going a little bit. It's not an exact science, but there can be no doubt that this bottom support line, at least for right now, has absolutely held. That being said, I want to move over to still a short-term chart, 770-minute chart. Simply means that you get 2 candles per day instead of 1, gives us a little bit more information. This is also the chart we've been using for our Elliott wave count. So as you can see on this, I've gone ahead and blown it up. One of the reasons I use the 770 for these real short-term count numbers, what we call the minors. We've got intermediate, minor, and then we're in major. Fourth, of course, these down here, 1, 2, 3, 4. That is the intermediate count. We're looking for a total of 5 legs. It is my current belief right now that we are now in leg 4 of this triangle correction. Now, if I'm correct, what does that mean? Well, what that means is that this market at this point has held support. Now, we believed it held support here, which it did, but it didn't. As you can see, it really faded out before it could ever really turn into a sustained rally. For this to be an accurate wave 4, we are going to get a fairly sizable rally, because the rally that we get is going to take us anywhere between, on the upper hand, I don't look for it to get to about 770, because I don't think it's going to do it that quick, but you have to look at the tact or the angle, because that line slopes downward. You could be looking at a topside target of anywhere between, say, 1760 and 1720, somewhere in that area. Now, if we are correct on our assumption here, we probably will see this market stall and hit resistance at the upper end of that channel line. If it breaks through and continues to rally, that means our count was off by 1, and we talked about that a few weeks ago. I personally think that right now it's trading fairly textbook, although this certainly is not a textbook case. It didn't have the ability to sustain itself, but I am looking for a 3 count. We'll have to see what happens right in here. But as you can see, it's my belief right now that this market should give us a rally, and that rally should take us over $1,700 per ounce. Silver. First, there's absolutely no doubt that I do not enjoy having any position get stopped out and then not see follow through. In other words, when we take a look, first we're going to look at the daily, then at our short term. But on our silver chart, and this is the May contract off of COMEX, this particular support level, 30.52, 30.54, as you see in here, to me has been critical. It did breach it, but not by too much, enough to stop us out. My fear was that a break below this would take us to the 78% retracement level, which takes us down over $1, $1.50. I wasn't willing to really risk that much on the trade. However, in hindsight, the market came back up. I wish we had done that, but I always have to put realistic risk-reward ratios into any trade, and overall, we are making money, both in silver and in gold. We've been making money since the beginning of this show. So we're doing well, but every trade's not going to be a winner, and some of them are going to be disappointing. This one was for me. However, you can see right now we've got this inside trading day. This is when we look at it in Henkin format. When we go ahead and convert it to straight candlesticks, just by removing the study, as you can see, it's a little bit different. And what we're looking at is a pretty nice support level being formed in this area. Traders, it really becomes clear when we take a look at this chart from a 420-minute standpoint. Much more short term. You can see the Fibonacci retracement area becomes a little bit larger. Same numbers, but we saw this just meandering down, but it certainly appears as though this level, this 61% level, has held. The other thing that is noteworthy now that we've actually taken a look, and I can go ahead and blow that back up for us, you can see that what is noticeable within this short-term chart more than anything else is really the two things we look for: body size. Look at these last 2 candles in terms of body size. Quite nice when you compare them to the candles that preceded it. Secondly, absence of lower wick on this one. This one does have a small wick on there, so now we see an absence. If we see follow through, in other words, if we see this, the next couple of candles getting stronger, yes, the price we're getting in at is higher, but I have more confidence on the trade. Aggressive traders, you can look to re-enter here. I'm going to wait just a little while before I issue our official buy signal and buy trigger. But traders, I think that we'll probably be getting back in this market on the long side. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.